Hey everybody, welcome to the first installment of Creating Spaces. I'm your host, Sam Heine, sitting next to my friend, Justine Scheuer. She is a chiropractor by trade and a real estate investor as of 2018. And what's interesting about Justine and the way she does things is that she seems to find interesting and creative ways of financing her different real estate projects, using other people's money, if you will. And so we wanted to get her on the show as the first installment for all of the investors out there that might be looking to get more creative in the way that they're structuring their deals. So Justine, how are you doing?
I'm doing well, thanks for having me.
All right. So I guess first things first, chiropractor, real estate investor, it's an interesting dynamic there.
Yeah, for sure.
How did that come to be? What inspired you to get involved?
So I got involved with real estate initially because I was looking for a side hustle to pay off my student loans. And it was a friend of a friend that casually mentioned real estate investing. So he gave me one resource, which was the Bigger Pockets podcast, and I ran with it. I listened to every single episode, read a ton of books that they recommended, and worked really hard for a year to save up a nest egg, and then bought my first rental property in 2018.
Nice. And you haven't looked back since, because you've certainly picked up some different projects since that point.
Yes, that is true.
Yeah. So I know you do BRRRRs, like buy, refinance, or buy, renovate, rent, refinance, repeat.
Yes.
So you're using other people's money there so that you can keep your own capital in your pocket. Is that how you started out, or how was that structured?
Yeah, so I think the great thing about real estate is there's so many different ways to invest, so many different strategies, and you could pick what works best for you at your certain situation in life. You could buy a property and pivot midway through. So I initially started with the traditional financing of saving up some money and putting 20% down, and then saving up 20% and putting that down.
Yeah.
And when I did that, I did it 3 times, and I realized that it was just taking too long to scale. And that's when I finally said, okay, I got to try this BRRRR thing out.
Yeah.
And yeah, the BRRRR, as you said, it is buy, renovate, rent, refinance, and then repeat. And that's been how I've been able to scale in the past couple of years so quickly.
Nice. And so that boils down to finding a lender or a private investor to fund your deals. And now in your case, on certain deals, you have the capital with other partners to potentially fund your own deals.
Yeah.
And then refinancing, pulling the money back out to
Yeah.
move on to the next one.
Yeah, absolutely. So my first BRRRR was a period of working really hard and saving up some money. And then I bought that house off auction for super cheap. And then I borrowed, my dad lent me $10,000 of my wedding money. And then I borrowed $10,000 from a friend at the time for a very low interest rate. So that's what's considered private money. You could work out usually with friends or family, borrowing money for a lower interest rate because they have faith in you. And that's how I started with my first BRRRR property. And then after I was able to cash out refinance, get all of my money back that I initially invested, and then paid back my friend and his little bit of interest that he earned.
Interesting.
Yeah.
And that's why I wanted to have you on, because I think a lot of people thinking about getting into investing, people that are investing but maybe have started a little slower because they're using their own money, they don't think of the creative financing types of options of putting these types of deals together. But it saves you time and builds you equity more so over time if you can find the right deal and find the right financing.
Right. Yeah, I feel like the BRRRR there's some barriers there because you have to find money to start with. And so you can work really hard and save up a nest egg. But one of the things they say in these podcasts that I learn is you talk about real estate as much as you can with whoever will listen. You always, when you introduce yourself, say what you do for a living, but then also say, I also do real estate investing, just to get like the bug out there that you are also a real estate investor. And then like social media, that's something like, I am not great with social media, but I was hanging out with a bunch of real estate friends and they're like, no, you have to be present on Instagram and Facebook. And sure enough, the more I start posting my rehab projects and what I'm doing with real estate, so many people have reached out to me wanting to give me money to invest for them, which is wild to me. But that's also another way. Just talk about real estate, show people what you're doing in order to use other people's money to to invest.
Well, it makes sense too, because I think a lot of people, I've had a lot of conversations with people who want to get into real estate investing, but they don't want to do the hands-on real estate investing. They're just like, I like the look of this return, but I don't know where to start, and I don't really want to do this or manage tenants. And so I think it makes a lot of sense for a lot of people.
Yeah.
And so it seems like it serves a certain niche.
Yeah, absolutely. And so you think like, oh, you're borrowing money that I'm the only one benefiting. No, these private money investors actually get no headache whatsoever, and they're getting a decent return. And so the great thing with private money is you get to tailor the agreement however you want, but you're talking about an interest that they're earning every single month on the amount borrowed. And so that could be anywhere, anything really. But right now, in order to make it appealing, people are paying like 10, 12% for a short-term loan, and that pays off.
Yeah, compare that to the stock market. I mean, it's even real estate and just sitting real estate right now, like it's above what you could get in other places, so it makes sense.
Yeah, and that's another thing, going into negotiating or asking someone for private money, it's not like you're begging for money. It's a win-win. This person gets to loan their money out and sit back, have no headaches, and know that they're going to get a steady check for so many months, and then that lump sum is going to be returned.
Yeah, and so you are able to sort of spot a deal from afar now. You can size up what a place needs to optimize it, to what you would need to add to a place to make it worth a certain amount, to pull the money back out, to pay everybody back at a certain percentage. So when you first started, were you just subbing everything out, or was that something you just pick up on these things over time?
Yeah, so I started with the lowest budget possible. So I did a lot of the work myself. YouTube was my best friend. There's a YouTube tutorial for anything. And then I also got some great contractors, some contractors that were willing to let me help. So I got a discount. And then I also learned how to lay flooring or do trim work or hang cabinets. But that first burr that I ever did, everything that could go wrong went wrong. You know, when you start taking down walls, you get to see, oh, there's termites here. Oh, this floor joist is going to snap. Contractor fell through the attic ceiling, you know, and so that was a big learning curve. And that's one thing, like you walk into it knowing that there's going to be problems, but every problem has a solution. And so with that first house, I feel like I learned a lot. As I continued to invest, there are some things that I would do, like tile or flooring. But then when I wanted to start scaling a little bit more, one thing that was common throughout these episodes of Bigger Pockets was, no, you have to hire out your work. You have to be more of a business person and not the hands-on person. So that's something this past year I've been really focusing on, is hiring out my work and trying to give my contractors some sort of like a steady income, knowing that I'm going to have some work for them to do. So they put me at top of the list. So that you have more capacity to take on more deals and focus on more things, so you're not so bogged down. Yep, exactly. Yeah, makes sense. What about the syndication stuff? Because this is something maybe a little bit newer that you've laced in, but it's also other people's money. It's sort of similar to a burr. You picked up a 65-unit apartment, slew of apartment buildings outside of Audubon Park in the Louisville area, privately financed. And what's the vision on that one? Like, what's the start game? What's the end game on that? Yeah, so this was 65 units right near Audubon Park, which is a beautiful neighborhood. And these apartments were mismanaged for so long. So there was a ton of potential with them. And when they came on the market, a group of us came together and said, let's try to make this work. So with an apartment syndication, you have your general partner team. So there's 5 of us there that saw the vision of it. And because of the price tag of 65 units, we didn't have those funds. So what we did was we did something called capital raising, and we raised the down payment for these 65 units by holding Zoom calls to talk about the deal and what our vision was. And so with this, it's like a gigantic burr. So we bought these apartments for under market value, and we're doing a very heavy lift. We're getting rid of any tenants that haven't paid rent, tenants that are very dirty, and there's a lot of like bug infestations because of that. So we're getting rid of all the bad tenants, remodeling all of those units, and then putting higher qualified tenants in. And then we'll be able to either cash out refinance to pay off our investors, or we could sell it after all is done, and then everyone gets a piece of the pie.
Nice. So the whole vision is to increase the value of the property through higher rents, through nicer finishes, shoring up certain things that maybe needed to be done for years that hadn't been done, paying the investors back, and then you ultimately, I guess the vision you're going to have a piece of that pie.
Yeah.
Either way, unless you sell it off completely.
Right. And so with this one, it's an 8-year game. So we're going to definitely hold it at least for 8 years. At that point, we will sell to exit. And then we might do a cash out refinance to pay off our investors midway through. It just depends on the market. And so again, great thing with real estate, you could always change your strategy or pivot, but you have this like very loose blueprint. And then whatever is most advantageous at the time, then you could make a decision then.
Huh, that's cool. Yeah, so other people's money, that's something to keep in mind out there, folks. Lastly, I guess what's the most exciting thing to you about real estate investing? What made you want to get in? Retiring early? Are you passionate about this type of stuff, chopping up different opportunities?
Yeah, so I'll have to say that real estate has probably been one of the biggest blessings of my life, not only because it's provided some sort of financial stability to my life, but it's also fundamentally changed my mindset, which is super weird to link real estate investing with a profound change in your mindset, but they go hand in hand. One thing that I noticed was that a lot of real estate investors are very thoughtful about why they're doing something. And it really made me reflect on why I was living my life, how I was living it. And the reason why I was doing what I was doing was because that's how I was raised. So I was raised in a household, like many people, where you go to high school, you go to college, you get a job, you work really hard, and then you retire hopefully in your 60s, and then you live life. And then you die. And so to think a little bit more about financial freedom and getting some sort of like side hustle where you get to create a little bit more freedom, where you get to take an extra vacation or spend a little bit more time doing the things that you want to do. That was really appealing to me. And so you'll hear this all the time in real estate. It's like, oh, why are you doing real estate? It's because I want to do what I want, when I want, with who I want.
Yeah.
And if you really dive deep, you can get those things. And so that really kind of like shook me to my core, and it made me think about this little life that we have in a limited amount of time.
Yeah.
And I wanted to maximize the life I have here instead of spending it as a W-2 employee.
Yeah. So there clearly are ways to accomplish your goals in the real estate investment world quicker than the traditional save up 20%, buy this property, buy this property, buy this property. And I think a lot of people find it intimidating in that way because it's a lot of money that has to go in.
Yeah.
So I guess in reflection of the conversation that we just had, what would you give out to folks that may be right on the line? They've always wanted to invest in real estate. They're not really sure how to start. You started as a chiropractor. Like, what would you tell those people in terms of how they could potentially get started?
Yeah, absolutely. So the number one thing is like pulling the trigger and taking action. And then when those things come up, you just take them one step at a time.
Yeah.
And knowing that it is going to be hard work. And that's another thing that I hear a lot with people saying like, oh, well, you had this, this, and this. And that's not true. I worked my very first property that I got. I heard about real estate in 2017. I took a year in order to educate myself and buy my first property. I had zero money to invest in real estate. So I was working as a chiropractor. I was working at Mellow Mushroom. I drove for Lyft, and I worked for a staffing company.
Wow.
So I hustled hard.
Yeah.
And so it is hard work, depending on how quickly you want to reach a goal. And so that's another thing just to keep in mind is that even if someone has a leg up on you, or they have other people's money because they have this connection or this family member. I started off and it was hard work. And then once you start getting a name for yourself and getting some momentum, it gets easier. Yeah.
Bootstrapping and a learning curve on the front end, but then you apply those maybe failures, maybe just, speed bumps along the way into like honing your craft. And it's just about getting started.
Yeah. Oh yeah. Absolutely.
Cool.
Yeah.
Cool. Well, this has been enlightening, folks. I don't know how you feel out there, but Justine, I appreciate you joining us here. First installment of Creating Spaces, and I think this was a good one. Yeah. Thanks for coming on.
Thanks for having me.
Yeah. See you all.